we from the Bitcoin world often say, everything's Bitcoin, and we know that fundamentally, but actually, there's a different thing to test it in the market and see what happens. And I think there's a bifurcation right now that is very, very clear that Bitcoin is this big sink that you can store capital in, store value. Maybe that becomes money if it's stable enough some future time, but the other side of the bifurcation is that most of the altcoins is about technology. They're kind of a replication of maybe startups in the tech world where you're trying something new and you're trying to blockchainify some part of the finance world, which is $5 trillion of the $110 trillion of equity.
Something unusual is unfolding in the crypto space, and it could explain the recent sharp drop in prices. Bitcoin Knots, a more customizable alternative to the mainstream Bitcoin Core client, has seen a staggering 638% growth in 2025 alone, jumping from 394 to 2,899 nodes by June 19th. That now represents over 13% of the entire network. Once a fringe software choice, Knots is now sending a loud message: we're not following Core anymore. This shift isn't just technical, it's ideological. A growing segment of the Bitcoin network appears to be losing faith in Core's direction. We've seen similar divisions before, like the 2017 block size debate, but this time it's deeper. It's about governance, identity, and who controls Bitcoin's future. Such internal tensions are shaking investor confidence. The recent market crash isn't just about geopolitics or ETF delays, it's about uncertainty at the heart of the system. As Bitcoin evolves into what some, like Willy call a digital fortress for capital, any disruption to its perceived stability makes institutions nervous. With states like Texas holding Bitcoin in their treasuries and big money watching closely, a sudden ideological shift under the hood is enough to trigger serious volatility. Something fundamental is changing, and the market knows it.
In simple terms, as Bitcoiners, we all know that liquidity is actually another word for government money printing in fiat, expanding the money supply. And so obviously Bitcoin being a very limited supply, capped supply of 21 million, it's going to perform very well under paper debasement. So actually, if you were listening into last week with this briefing, not a lot has changed. Slight developments, but mainly the structures pretty much like last week. This is the yellow line here is the risk model that we have. The risk model is really sensing liquidity across the cycle, mainly on the buy side. Basically, how much capital is coming in to support the price of Bitcoin relative to a sort of a 4-year cycle. And so when the risk goes up, that means liquidity relative to the price expansion is dropping off. And so when that happens, kind of the gusto of pushing price up starts to drop away. And you'll see this as a multi-month warning of a top coming. So in 2017, you could see that it was actually fired in the $2,000 range, even though the top was 20,000. And the risk would drop and then we'd fire up again, but it would chop around and give you a lead warning signal. This was a 6-month warning signal. In the last cycle of 2021, it fired in January and the top was November. So that was, 10 to 11 months there before it fell down. So even though the risk is climbing, the liquidity is waning relative to the price rise, the it's not to say we're at the top. Obviously with global macro, we're going into recession according to the indicators, but the ship's not sinking right now. So most likely we are going to move upwards if you're a macro cycle investor.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
It's not really a double top as other people are seeing it, just from technical patterns. Fundamentally, it seems a little bit too soon. And I will just move over to a more fundamental view of that liquidity. In this purple line, this is actually measuring the entire system of Bitcoin and how much capital it's absorbing in, right? And so actually here you can see that's 1 billion. We're currently absorbing $1.2 billion per day coming into the Bitcoin network. It's not the actual rate of capital coming in, but it's actually the change of capital. So if I go to this chart here and look at this purple here, this is actually the speculation in the system, and we're coming off this zone where there's been a whole lot of speculation going into the top, a lot of late longs coming in, and we've been, detoxing out of this sort of paper bet environment. And so we've been in this space where like it's just like tactical trader wars between positions. And so here in the heat map, the hot spots are where people will get liquidated, and you'll see it's kind of a random walk without any kind of tailwinds from fundamental capital flows coming to the network. And a lot of that has been purged, so it's a lot healthier than it was even last week. Last week it was up here. Now we're into the zone where it's starting to look interesting. So you really want to see the speculation down into the negative, like 1, 2, 3, 4 standard deviations from the norm. And so we're heading into that space. There's a bit of time to move. I'm not seeing this curve like start to initiate and get out of its purge. And once that happens, it's generally a good environment where we can rebuild a bullish base. So that's where we are. This one's picking up on the speculative capital, and it tends to be leading. And so again, this is kind of reinforcing the idea likely this is going to roll over. We don't know for sure, but the leading indicator says it's coming down. And maybe that stops very quickly and comes back up, and this will chop sideways, or maybe it continues to come down and we get kind of a bearish phase. If we do, then we will have more headwinds for bullish actions, and I would expect further sort of cool down from very, very almost overheated run coming up to the top. It came up here from very bearish to very bullish, and in terms of like mean reversion oscillations, it was very overbought here, and this is a very nice cool down. And if we get into a price range in the mid 90s or even low 90s, that's a great place to launch from, because you're now oversold in a very healthy place to spring up and break all-time highs. And so in a timing signature, just looking at the way these charts are shaping up, it's looking like we might have a good bullish launch pad into July. And just on the short time frames, this paints it as well. This is VWAP using on-chain volume rather than exchange volume. And again, as we get into these lower bands, if we see this turn around, it's usually a good place to launch from oversold. And again, a different view is this is SOPR. So it's really a measure of how much profit has been transmitted between investors. And when you see SOPR go up and up and up, that means there's a lot of profit in the books being transmitted. And as it rolls over, that's pretty much a sign that investors are selling and selling and selling, even with less profit. And that's the sign of profit taking. And generally, we want the profit being transmitted in the books between investors to be near zero, so that there's no more selling to be had by the guys in profit. And we're not there yet. Again, lately the last week has been very flat. The profit taking has stopped, Sometimes that, if it's a very bullish environment, it can go back up, but I've just covered that it's not in a bullish um, environment with capital flows. Like if this was running up, then certainly I'd be more expecting SOPA to increase profit and the whole price to run up. But right now, I'm looking also into July for this to cool down closer to zero, and that would be another fundamental piece in the puzzle to have a really good launch pad to break all-time highs. So yeah, that's how I see it. And I will hand over to Jan now with the Hawkeye models and framework, which really is looking at flows and liquidity and microstructural volatility between the entire ecosystem of crypto. We can pick up a lot of market signaling around where Bitcoin's going, where are the flows going into altcoins, are they going back into Bitcoin? And between that, you can actually get pricing structure of where Bitcoin will go.
Since Bitcoin's supply is capped at 21 million, Willy Woo suggests that its liquidity essentially reflects government money printing and fiat expansion. At the moment, not much has changed from last week. Buy-side liquidity, which tracks how much fresh capital pushes Bitcoin's price up, remains steady. However, Woo's risk model shows that liquidity isn't keeping up with price growth, which could signal a market top in the coming month. Currently, Bitcoin absorbs over $1.2 billion per day, and the market appears healthier now that speculative trading has cooled down. If this trend continues, less speculation and slower profit-taking, it could lay the groundwork for a strong upward move as early as July. Let's dive into more of Willy Woo's insights in the next clip.
All the global macro firms are getting paid to increase their leverage in the system. So suddenly you get all this flow of capital into the markets. And as the liquidity drops, as in the rates drop, actually there's a disincentive to leverage up because now it's going to cost to leverage. And so capital gets pulled out of the system, and that is actually the sign that we're approaching, a bearish environment. There's a question here that talks about, to me, on how I measure liquidity. And so this is the way I look at it, is that when we're talking about liquidity, we're just looking at flows of capital. And so I'm interested in the flows of capital coming into Bitcoin, right? When it's flowing out, it hardly ever flows out, but even if it's reducing, it's not a good environment for price action moving up. So how do you measure it? Well, you measure the flows coming to the network. Bitcoin's got a UTXO like framework, and so underlying that blockchain, we can measure when investors move capital between each other. Because you're sending coins between wallets. That's usually between a seller of Bitcoin to a buyer. Usually that happens through an exchange. So you're seeing exchange and it's coming off. So you look at those flows and like, what price was it coming on and off at? And then you get an idea, right? We can actually, not even an idea, you can measure exactly how much money came in at the time that the flows came in and out. So you can measure basic things like cost basis and actual money being absorbed into the system. And so, but that's not actually tight, because I could send money into an exchange, and when like Michael Saylor sends a whole bunch of money to Coinbase, like when does that buy happen? Does it happen immediately, or is he waiting? It just sits there. So for that to pick up on that, you really need pricing data to pick up on it. So the way in which I detect liquidity is a combination of measuring the real flows between investors that are coming into the network and using pricing signal structure to determine a tighter sort of responsiveness around it, because you should be able to pick up when that execution is happening. And so when you bring that together, then you're seeing when the capital went into the network, and also the price, the execution of it, and that's when it actually goes in, when they hit buy on the button. So that's how I measure it. It's pricing signal and flows of capital, and that's all to detect the moment when that liquidity hits.
According to Willy Woo, a strong Bitcoin foundation often signals the early stages of a bull market, but real confirmation comes when capital begins flowing into large and mid-cap Ethereum-based projects. While random activity is usually just background noise, this clear movement of funds is a classic indicator of a genuine bull run. Since 2017, Bitcoin has increasingly been seen as a store of value, while altcoins are recognized as innovative tech platforms, though only about 1% of them tend to survive, mirroring trends seen in the broader tech industry. Wu notes that predicting price targets based on liquidity can be tricky, especially during the volatile end phases of bull markets when there's no historical data to rely on. In these moments, traders often turn to tools like Fibonacci retracements to identify resistance zones, tools that can become self-fulfilling because so many rely on them to manage risk. In fast-moving markets, technical indicators and real-time liquidity flows are generally more useful than fundamental data, which often lags behind. He also highlights how rising interest rates in traditional finance lead businesses to take on more debt, increasing capital flow into market. Conversely, when rates fall, there's less incentive to leverage, often signaling a bearish shift. Wu tracks these capital flows into Bitcoin using price signals and on-chain data to pinpoint when new money enters the market. This approach helps identify the key moments when liquidity is driving price action. So, what do you think? Do you see Bitcoin as a long-term store of value, or are you more drawn to the tech potential of altcoins? Let us know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.